Hey guys, Joel Frank here, market analyst for YouTrading, and in today's video I'm taking a quick look at a trade idea that I'm sort of thinking about at the moment, and I'm going to talk you through basically what I'm thinking. So it's Bitcoin, the world's largest cryptocurrency by market capitalization, and the way I'm sort of playing it here is as like a speculative risk asset. So you could also, a lot of the ways that Bitcoin moves in the last couple of quarters anyway has been similar to, say, like the Nasdaq or volatile tech stocks. So that's the way I'm viewing this, just a speculative risk asset. And let me talk about the fundamentals, the technical setup that I'm watching, and then talk about how the fundamentals might sort of feed into this. As you can see, in the last couple of weeks, Bitcoin appears to have been moving higher, I think, within this sort of gradual uptrend. And I'm going to discuss the fundamentals in a minute, but I expect that this is probably going to continue, okay? And the trade that I'm sort of looking at here is if this mini pullback continues, which it could easily do, and we fall back to around 22,000, or pretty much if we fall somewhere between the 21-day moving average, which is here in blue, and the 50-day moving average here, which is here in that sort of orangey colour, that's when I would be potentially thinking about reloading on some long positions, and then potentially you could put your stop loss, it would be a vulnerable place to put it because I think a lot of other people would maybe put it there as well, but you could put it under this recent low here, just below 20,500. And the target would be, you'd be expecting this trend channel to continue moving higher, and I think Bitcoin is eventually going to get above 25,000 and hit this low from May at 25,400. So that's the play. Why do I think the fundamentals could tie into this? Well, one of the major themes in the market at the moment, it was one of the big themes last week, and it certainly seems to be one of the major themes this week as well, is that the US and global economy are slowing or already in recession. I mean, it doesn't really matter at this point because what markets are pricing themselves towards is recession, okay? That's why we're seeing this week and last week big drops in US, in Eurozone bond yields to reflect a worse economic outlook. This is at the short and long end, and a less aggressive central bank hiking response in the next couple of months, okay? Obviously, we had the weak GDP data out of the US last week, which showed them being in a technical recession in the first half of the year. We've also had PMI data out of a bunch of countries, including the US, Eurozone, UK, China, on Monday that showed deteriorating growth in all of those countries. And US data, we've got a lot more of it this week, so this is going to remain a major theme. What have we got? We've got JOLTS job openings today, which, to be fair, should show that the demand for labour in the US remains strong. That's not really an issue at the moment. We know the US labour market's in a pretty good state. But we've got ISM Services PMI on Thursday, which, like the manufacturing PMI data, might show, or it's probably going to hint towards, a rapidly slowing US economy, okay? And this, I think, could continue to benefit Bitcoin and other risk assets, potentially stocks as well, potentially the Nasdaq, if it results in further downside in bond yields, which further reduces the opportunity cost of holding these risk assets, and if it further results in more pullbacks in Fed tightening bets, basically. Remember, the Fed last week did say that it was it sort of implied that it's not on like a set path. It's going to take things meeting by meeting now. It does expect further tightening to be appropriate, but definitely it wasn't a pushback against the idea that it could slow its pace of tightening going ahead. And the Fed did sound a little bit more concerned about growth. And another thing, guys, that I should mention is there's been increased signs recently that inflation has peaked. Like, you just need to look at commodity prices, which have come way off their recent highs, like oil, and copper and others, and in the ISM manufacturing survey that we had on Monday, out of the US anyway, the prices paid sub-index saw a massive drop. I mean, it's still high by historical levels, but yeah, like a lot of people were saying that could potentially confirm that we've had this peak inflation moment in the US. But pretty much, if all of what I'm talking about means that the Fed's going to be more dovish, yes, okay, economic weakness, we don't like that. I'm not calling for Bitcoin to move back to all-time highs here, but if we do have a more accommodative outlook for Fed policy, then I think that in the medium term or short term can continue to support Bitcoin higher. So anyway, yeah, that's the trade idea that I'm looking at this week, guys. I hope you found that video informative, and I will see you all in the next one.